We are back answering your questions on the child tax credit with Scott Braddock from Scott Braddock Financial and J.W. DeGance, the Greensboro District Manager at Jackson Hewitt. Okay, we had a lot of people send in questions during the break about, I had a baby after I filed my tax return. How do I get the money? What would you tell them, J.W.?
Coming soon, hopefully, from the IRS portal, you'll be able to add your dependent that you had here in 2021 after you filed your tax return, so that then you will be eligible for the future payments for that credit.
And will that be retroactive? Will you get those past payments too?
We believe it will be. The IRS recently announced that if you were not in the first round of the July payments, but then you were eligible in August for the payments, that they were going to increase your payments so that it be spread over 5 months instead of 6. So it won't recoup all of it at once, but they said that they were going to recoup it over the shortened period. So assuming that they continue that forward, they would do that for the rest of the payments.
Okay, on the flip side of that, Scott, someone's asking, my child was 17 when I filed, but he turned 18 in the spring. Does that disqualify me?
Well, the short answer is yes, it will. And the IRS is aware of this. As long as you're filing your taxes, of course, they're aware that that child is going to turn 18 this year. So you should not expect to receive any payments for that child or any child that turns 18 between now and the end of December of this year. Now, we want to keep in mind that there is a credit for those children that are 18 or 19 to 24 that are full-time college students, and that's $500. It's different, of course, than the those that are 17 and under.
And we're getting lots of questions too about divorced parents or separated parents. Do they both have to opt out of the credit? Can one person do it and the other one still get the money? What would you tell them, JW?
It all depends on who is going to be filing that child in 2022 for 2021. They're the ones who then really should be getting this advance payment. And so the other parent who filed in 2020, which this is most likely based off of the current payments, they're going to want to opt out. Of course, parents can then come to an agreement between themselves on who is going to claim the child when they do file their return. But in that instance, if they're alternating years, one of them who just filed would probably need to opt out.
And so earlier we were talking about how they had an issue with some of the direct deposits and that they were going to send out a check. A couple of people have also said, what if the IRS doesn't have my right address? What do I do, Scott?
Yeah, so that's that would be a concern, and so we want to make sure that we have our information up to date, and I believe we can take advantage of one of the portals, if I'm correct, JW, to update that information. Is that one of the portals that is up and running?
I don't believe it's up and running yet.
That's okay.
August, so I'm hoping by the end of the month it'll be up and running then.
Yeah, that's what they were saying on that one in particular, was the end of August, 1st of September, I think, is when we're anticipating that one being available.
It's amazing how much they still have to work out in all of this. Some people are also saying, I'm not getting the full amount. Why is that? What would you tell them, Scott?
Right, so if you're not receiving the full amount, it has to do with your income. So we have income thresholds here. For individuals, as an example, it's $75,000 or less to receive the full amount that you're entitled to. For a married couple filing jointly, it's $150,000. Now, you don't just automatically phase out 100% if you're above those income thresholds. It starts to fade out. For every $1,000 above that, you lose $50 of that payment. So if you're receiving less, more than likely it has to do with that income threshold.
And what if you made less than that last year, but next year when you go to file, you're going to make over that income threshold? What happens, Scott?
So that is one of the big reasons that folks want to unenroll. They know that there's been a change in their income, and they don't want to have to go back and pay this money to the IRS, and so that's why they're going ahead and opting out, because they know there's been a change to their income, and so that is probably the number one reason that folks are wanting to opt out.
In the time of coronavirus, it's the opposite for a lot of people too. They used to make more money and now they're making less. What would you tell them, JW?
I would say, if you're already getting this money, then, take advantage of it. This is why that they have this great payment plan in place to help Americans, help taxpayers, so they can get them through this time. And just realize that this is one reason why that they chose to do this over the 6 months, to get half the credit up front and then half of it when you file your tax return.
And if you're not getting the money already, will they pay it to you when you file your taxes and it shows you qualify then?
Yes, absolutely. So if you didn't receive any payments, then when you file your tax return, you're eligible. You'll get the full credit amount.
Well, thank you both so much. This is a very complicated topic for a lot of people anytime you talk about taxes, and we appreciate having two such great experts here.